All right, our guests are here, Gaurang Shah, Mayuresh Joshi and Manas Jaiswal. Let me straight go to Gaurang. Gaurang, your picks. All right, let me ask that question again,
so
Gaurang.
Morning, Anand. Have three large cap names which are... Yeah, can you hear me?
Yes, go ahead, Gaurang.
Yeah, so we have three large cap picks. First one is from the auto pack, Tata Motors. Long-term target stands at 620. A very conservative target. Given the numbers, we are expecting it to revise it upward if they are better than our expectation. Second one is from not so very favored sector IT. We've continued to remain positive on IT with a target of 1250. We are positive on Infosys. And the third one being Pharma. Not so preferred name, but we believe the negativities are in the price. Sun Pharma is the investment idea with a target of 980.
All right, all big cap, as Gaurang prefers to be in. All right, Manas Jaiswal, you have some specific picks, technical picks. Can you share that with us?
See, I have two sell calls and one buy call. So sell call on M&M Finance, where yesterday stock witnessed selling pressure on higher levels. And after yesterday's move, I think stock is ready for a correction, and possibility is high that stock can test 360 now. So one can go short in M&M Finance and keep the stop loss above 390. Second is a sell call on Indo Count, where stock is continuously making higher lower tops and lower bottoms from the level of 1050. And now it broke the support of 725. So now possibility is high that we may see further downside in Indo Count. It can test 685. So one can go short with a stop loss of 730. And last one is a buy call on Petronet, where we witnessed smart rally in last two trading sessions. And yesterday it broke the resistance of 365 with higher volumes. Oscillators are showing positive crossover. So we may see further up move in Petronet. It can test 379. So one can buy it with a stop loss of 362.
Mayuresh, what are your picks?
So, morning Pankaj. Largely again, I think with the rate cut that we have witnessed yesterday and the expectations of the banking industry, the credit growth outlook thereof, the asset quality pressures to ease, the larger private sector banks is something that I'll still continue to prefer. Again, one must really understand the credit costs that have got built up into the system shall start receding over the next few quarters. And because of the absence of interest rate reversals, the NIM should also improve from the current levels. So all these factors should start probably moving in the right directions for the larger private sector banks.
Which ones in the private sector banks? There are a lot of listed names.
So again, I think ICICI Bank has largely got beaten down because of the corporate issues and the corporate lending book that it carries. But the front loading that they've done in Q1, the expectations largely are that in Q2, they will further continue recognition of these assets going forward. So largely, I think the asset quality pressure should start easing Q3, Q4 onwards. And with credit costs going down, with the absence of interest rate reversals, my own take is that the NIM should improve going forward. So ICICI Bank remains a prospective candidate for us from the larger private banking space.
Any other names, NBFCs, cements that you like?
No, cyclically, I think cement as a story should continue doing well. You just need to leave the Q2 results on the sidelines because of the monsoons that we've witnessed, and the lower dispatch numbers would be obviously seen. But cement as a theme should continue doing well, utilization levels picking up, the realization should remain stable and improve thereafter, and the capital ratio should improve. So I think anybody holding on to cement stocks from the large cap names, Ultratech, from the mid cap names, JK Lakshmi, Mangalam, JK Cement, I think these stocks should do well in my opinion.
Right. The point that you made about ICICI Bank would also be valid for NBFCs or housing finance companies?
So again, I think the theme there has worked out brilliantly in terms of figures. And in the last 2 years, we've seen credit growth actually not grow. I think the housing finance companies have actually grown at a stupendous pace. Secondly, I think the asset quality pressures have got contained on their balance sheets. And with cost of funds going down, our own sense is that spreads and NIMs should largely stabilize and improve. Secondly, I think in terms of core advances itself, on the retail side, the retail advances should grow at a very decent clip over the next few quarters, which will give support to their lending book, and that will probably aid their spreads going forward as well. So largely, yes, as a story, I think housing finance companies should continue doing well over the next few quarters.
Gaurang, do you think that NBFCs will do well because of the cost of funding coming down? Is that something which is not already priced in by the market?
Well, Pankaj, two things. One is, of course, cost coming down is always a huge incentive for the NBFCs, housing finance companies, microfinance companies, and diversified NBFCs. Other than that, I think if you have to look at certain other developments, first one is, of course, the RERA. Then you had the RITs. Our sense is that post the implementation, and in Maharashtra, as I have been given to understand, I think by October hand you will have the committee or the authority in place who will oversee the execution of RERA at ground level. And post the implementation of RERA, there are certain listed entities which are very weak in terms of balance sheet, have got stuck with various projects in terms of initiation or half completion, working capital in dire straits, absolutely in dire straits. And of course, their existence is going to be a big question mark. This is, I'm talking about the listed entity. Non-listed, unorganized sector, there are a number of large players who would want to disappear from the existence because their capability to do business is going to coming down to absolutely ground zero level, which opens up opportunities for larger and stronger players with great balance sheet and visibility in terms of execution. So my sense is that there is going to be price correction in certain geographies. Is not going to be much, but nevertheless something is better than nothing. In other geographies where the supply exceeds the demand, the correction is going to be even larger. So that would be another trigger for the end users or even as an investment idea for people to go and buy into properties. Which will again, raise the demand for loans to a certain extent. And in that case, the loan book growth of HFC, NBFCs are going to be much escalated to a higher level. We have coverage on names like the flagship company in the HFC segment, that is HDFC Limited, followed by LIC Housing, followed by Canfin Homes, and then DHFL. In microfinance companies, we have coverage on Bharat Financial, earlier known as SKS Micro, and Ujjivan Financials, including Equitas. And both these last two names are recent listing. And Ujjivan especially has done quite a bit post the listing. Amongst the diversified NBFCs, we like names like Reliance Capital, M&M Finance, Sundaram Finance, if you will. And of course, we are more focused on companies which have expertise and capability in terms of rural focus.
There was an exhaustive list of NBFCs from Gaurang. He likes a rural place, but overall NBFCs also, they seem to be positive. Let's stick to the financial space. There has been some news flow into a lot of financial names. Let's start with HDFC Limited. They have given a Q2 pre-briefing or Q2 pre-update for investors. So their results come out on October 26th, which is still about 20 days away. Profit on sale of investment for HDFC in Q2 has been 19 crores. This is versus a number of around 48 crores. Income from dividend is about 456 crores, and they always sell some part of their loan book to HDFC Bank, which they do for them in terms of cross-selling. So about 1939 crores is what they have sold. Most of these numbers are in line and there is no major surprise. So don't expect any major movement on HDFC, but going till 26th, these will be the numbers that the street would be working with. We had the policy yesterday where we saw a rate cut coming in. Following that, ICICI has cut their marginal rate by about 5 basis points. This is with effect from October 1. Their new rate stands at 9.05%. It is the lowest in the industry, but you expect some cuts from the likes of SBI, HDFC Bank coming in today or tomorrow, and that should probably match this to about 9.05%. Yes Bank had opened a bond issuance of the infrastructure bonds. They have raised about 2,140 crores. The bond got subscribed more than 2.5 times. So there was a lot of demand for this bond. So they've managed to raise it via the infrastructure bond. Again, sticking with the flow of fundraising for banks, Shriram City is having a board meet on October 7th, that is in the next couple of days. They would be looking to raise funds of about 100 crores. However, whether it will be via equity, via bonds, via tier 2 bonds, that is something which they have not mentioned in the release. UCO Bank has issued to LIC on preferential basis 7 crore shares. Against details of pricing, how this goes through, what will be the impact on their capital is something which the management is yet to declare. Jay Thakkar is also now joining us this morning. Jay, good morning. Your picks before the markets open?
Hi, good morning, Pankaj. Well, I have 3 buy recommendations. The first one is on Torrent Pharma. I think this stock has formed a good symmetrical triangle pattern, and I am expecting a breakout from this pattern on the upside. One can buy this stock. The minimum target in the short term comes to around 1720. The stop loss on the lower side will be 1620. The second buy recommendation is on JVM Auto. This stock seems to have completed its corrective pattern, that's a zigzag corrective pattern, and now the up move is likely to start. The minimum target in the short term comes to 230. One can buy this with a stop loss of 201. And the final buy recommendation is on HSIL, which too seems to have completed a similar kind of pattern as of JBMA, that is a 3-wave corrective pattern. And on the upside, I think that again higher tops and higher bottom on the hourly charts have started. The minimum target on the upside comes to 370. One can buy this with a stop loss of 332.
Right, Jay, any reason why 2 cash stocks, generally you tend to have FNO names into your list?
Well, Pankaj, we have seen that Nifty being trading in a range now on the upside 88.50 and on the lower side 86.50. Within this range, the stop loss or the risk reward is not that favorable for the bulls or the bears as of now. Hence, we are seeing good momentum coming in the mid cap and the small cap cash stocks. So I think one can choose them instead of FNO at least till the next week, where we have a series of holidays.
Right, we'll wait and see how these names do. Just about a few seconds remaining for markets to open. Let's see what the open is. Steel stocks should be in focus. A lot of financials we spoke about should react to news flow. 8,806 as far as Nifty opening is concerned, 37 points higher. So again, much higher than SGX Nifty. In the last few days, the market opening has really not tracked the SGX Nifty or done exactly what SGX has been doing. Sensex up 143 points, looking in a good start. Sun Pharma on your screen is up 0.25%. BPCL is down 1%. No particular news flow on BPCL, but it's had a good run. Reliance 1,111. You've started to get estimates for Q2 for Reliance, where again it's expected to be one of the record quarters. Maybe that's the reason why it's doing well. Dr. Reddy's was a stocks in news yesterday. It's down about 10 rupees today. Ambuja Cement as flat as it could get. Hero MotoCorp about 3,536. Bharat Forge on your screen down 26 rupees. We got the numbers or the data for US truck sales, and again, in July in August there was some expectation that there would be some increase, but the numbers did not really. The numbers of this month, that is September, did not really indicate that improvement. HDFC Limited 1,432, no change. 12,000. As I told you, most of the pre-quarter briefing that they have done was in line. ICICI has cut down rates by 5 basis points, 1 to 2 rupees higher. Again, no major change. However, volumes are good on this name. Yes Bank, 41,000 shares in terms of volume, so very good volume, 0.5% higher, but this was also the case yesterday. Shriram City Union, no volumes, about 3 rupees higher, 0.14% higher. UCO Bank is up about 2%. Most of the PSU Bank this morning are also doing well. Even yesterday, once we had the policy out of the way, PSU banks did particularly well.
All right, let's just pull up the counters that are looking strong right now on high turnover. And the number one is Tourism Finance Corporation of India. That is up about, right now, 11%. It had gone up almost 15%. Right now, it's 11% up. And the news apparently there is that Rakesh Jhunjhunwala, Amitabh Sonthalia of InSync Capital are likely to provide finance, and they've apparently bought 4.25 lakh shares in the company. It's gone up 11%. The next one that's gone up is Aksh Optifiber. Aksh Optifiber is also up about 11% at the moment. Sri Kalahasti Pipes, that one's up 6.5%. Kalyani Steels, as Pankaj mentioned in the morning, that steel is going to be in focus because the MIP has been, minimum import price has been extended for another 2 months. NBCC is up 3%, Dishman Pharma up 2.2%, Bank of Baroda up 1.8%, Hindalco up about 1.7% at the moment. There's REC, which has come into the picture with 1.5% up. Jindal Steel and Power, that's up as well, is up 1.5%. Jubilant Life now up about 1.5%. Idea Cellular, that's up 1.4%, and one of the reasons for that is that the ET has reported that Kumar Mangalam Birla is planning to reorganize the tower and telecom infrastructure business in Idea Cellular. Tata Communications up 1.4%, Canara Bank up 1.3%, LIC Housing Finance up 1.3%. All our guests have been bullish about that financial space, especially after yesterday's rate cut. Vedanta is up 1.3%. Punjab National Bank, Oriental Bank of Commerce, State Bank of India, all of these are up between 1.1 to 1.3%. So the banking space looking strong at the moment. The biggest loser is Bharat Forge. Pankaj took you through what is happening to Bharat Forge's US business. 20% of the top line comes from there. EBITDA actually comes from there. And they're facing a huge problem. They're 2.5% down. That's the big drop. BPCL is down about 1%. Bajaj Auto, 0.75% down. IOCL down about 0.5%. Petrol prices rising, but despite that, these oil marketing companies are losing ground. Gaurang, in terms of the oil marketing companies, are they going to be now a little bit squeezed because of the fact that oil prices are likely to go up?
Well, I have been very vocal and about our view on the crude oil prices. Largely, you have seen this prices rally because of the cut that has been put in place. Three countries have been left out, that is Nigeria, Iran and Libya. Now Libya alone, the port which supplies crude oil, has got the capacity of supplying almost 6 lakhs barrels per day. Add to it the output from Iran, which is otherwise deprived of $100 plus crude oil prices because of the embargo and sanctions by the UN. Do you look at any huge consumption theme coming up, like for example China or India? Well, that is distant reality, at least not even visible on the horizon. My view is that this bump up from $47, $48 on the Brent to $50, $51 a barrel that we are witnessing right now is more because of risk stroke speculative premiums going up. Whether they are sustainable at these levels, I don't think so. Is there a likely possibility of cool-off on the crude oil prices, both on the NYMEX and Brent? I definitely feel yes. Are we as an economy going to get impacted because of this marginal bump up, which is related to rather speculative and risk and not any basic consumption theme visible on the horizon? Well, I don't think our economy is that much vulnerable at even $55 a barrel. Only and only if you go beyond $65, $70 a barrel on NYMEX and Brent respectively, will we start to have risk. Another thing on it is that recently we have agreed in bilateral trade with Iran, and Iran happens to be the second largest producer of gas, fourth largest producer of crude oil. And our bilateral relationship with Iran secures large part of our energy requirement. So I don't think we are going to be getting adversely impacted as far as $50, $55 on crude oil basket. And our view is also that we are largely going to be in a range of $40, $45 on the lower side, $50, $55 on the higher side. And even the International Energy Agency, which is the most respectable body, has given a view that they do not foresee $60 plus crude oil prices anytime in the near future. So and of course, let me give a disclosure. We are positive on all the three oil marketing companies, HP, BP, IOC. And we are equally positive on names like upstream companies, exploration names like Oil India and ONGC.
All right. What is the logic behind being positive on Oil India and ONGC then? If you feel that crude prices are not going to go up, then why are you positive on ONGC?
So we are positive because of the policy decision by the government of the greatest negative overhang on upstream companies in terms of subsidy. Secondly, the government also given a verbatim that they are not going to suck out cash on balance sheet in form of huge dividend payouts, and they are going to encourage these companies to invest in natural resources, not only onshore, offshore, as well as in foreign countries. And we are going to see a highlighted investment activity as far as ONGC is concerned via OVL. And also in case of Oil India, especially towards Bay of Bengal and that side, the ultra deep exploration of natural resources is what is going to attract a lot of investment. And my sense is that these companies from current levels where all the negativity is priced in, your downside is extremely protected. Yes, volatility in crude oil prices in terms of downward move will definitely see some amount of short to medium term restrictive move. But long term, we believe that because of the policy changes by the government, it is going to be something that you should have an investment outlook on. And mind well, when you look at cap goods engineering, oil exploration sector as an investment idea, your time horizon should be at least 1.5 to 2 year plus, because these are all long gestation sectors in terms of their execution and earnings visibility.
All right, let me get a view from Manas Jaiswal about the oil marketing companies. Mr. Jaiswal, if I look at something like IOCL, for instance, then it was consolidating for a while, but yesterday it appeared to break out of that consolidation phase and move upward. Today we are seeing a bit of a sell-off. Is this an indicator that that breakout was not really a breakout, or is this an indicator that we're taking a pause but that momentum will continue?
See, first of all, the breakout level was 590, 592, and stock is still trading above that. Yes, after 3 days rally, we are seeing some profit booking on higher levels, and possibly you may see further downside in if you're talking about intraday or maybe 1 or 2 trading sessions. IOC can come down and test 600 or maybe 595. But I think if you're a medium-term or short-term trader, then definitely you should wait. You should buy the stock on decline near to 600, 595, because trend is quite positive. And if you're setting a target for say around 1 or 2 weeks time, then you can set the target near to 640, 645. So on decline near to 600 to 595, that would be a great buying opportunity. I think the stock has a lot of support near to 575, so keep the stop loss below 575.
So you expect it to show some correction over the next few days or intraday, and around that 595 you said that is the right place to enter?
Yes, definitely.
Okay. Let me get a view on ONGC from Jay. Jay, if I look at ONGC, again very, very strong breakout yesterday. A bit of a sell-off today, or at least not a sell-off, it opened strong and then has kind of softened a little bit. But do you see this momentum continue, or you think that this 272 odd level is where it should find a bit of resistance?
Well, as far as I remember, that when ONGC was hovering at around the levels of 225 to 30 levels, when we had discussed, I had said that outlook on ONGC, at least for the medium term, is bullish. The reason is the fall which we have seen on ONGC right from the levels of 471 until the levels of 187 approximately seems to have gotten over, and we will see at least some pullback, that is a retracement of the entire fall. The minimum target that time also was around 298. Right now also we feel the minimum target is 298, which is 38% retracement of the entire fall. If it manages to say, take off 298 levels, then yes, it can extend its up move till 331 levels as well. See, entirely as you were correlating ONGC with the crude oil prices, and hence as we have seen some pullback coming in the crude prices, we have seen ONGC continuing its uptrend. I think that overall setup as far as the international crude prices are concerned, what I think is as of now the range has been 52 on the upside to around 45 on the lower side. That's the broader range for the international crude. But if at all, if manages to surpass the levels of 52, it will be a breakout from an inverse head and shoulders pattern, which is quite visible on the weekly charts. Thereafter, the minimum target will come to around 57. So the way the momentum indicators are clearly in a buy mode, and is the way the international crude oil prices also are forming high tops and high bottom, and so is ONGC. I think the probability of 57 is quite likely. I'm not looking beyond that, but yes, minimum 57 on the upside out there. 298 to 331 on ONGC is what I'm expecting. 298
to 300, you said?
Yeah, 298 to 331.
to 331. All right. Let me come back to the financial space. Mayuresh, I know you said that you are bullish on the financials. The way you read yesterday's, rate cut by the RBI governor and the MPC, do you think that this is the beginning of rate cuts? That this is a team now in the RBI which is going to be much more dovish?
Morning, Anand. So again, if you go by the commentary that had come through yesterday, the inflation trajectory is very much on the guided path. And largely, again, I think with the kind of monsoons that we've witnessed, with expectations of new crops coming in, the food inflation is expected to remain benign and in fact go down over the next few weeks and quarters. Having said that, probably I think the governor's direction in terms of being accommodative as data dependency will remain extremely high on his agenda, and data dependency again points out that inflationary trajectory is down, indicates to the fact that more rate cuts are on the anvil. So I think how much will come through for the better part of the next couple of quarters, our best estimates is another 25 bips coming through the system. And again, I think the transmission will be very, very evident. We've already seen ICICI Bank cut its rate by 5 bips. I think the other banks will follow suit. So I think the credit growth should start picking up in the system by the end of Q3. And largely, I think that should abet the banking industry as a whole.
Gaurang, we heard Michael Patra yesterday talking about the neutral rate and saying that the real rate, they're happy with the real rate now of 1.25% rather than 1.5%, which I think was the rate that they held under Raghuram Rajan. That itself is more accommodative, right?
It's definitely, and the sense is, even if you look at the statements of earlier Governor Dr. Raghuram Rajan, one thing and only one thing was on the mind, and that was inflation, and especially related to agri-food inflation, which was spiking up and creating a mayhem with respect to the decision-making capability and capacities for a rate cut. Now that you had close to normal monsoon, the prediction was that we are going to have above normal 106%, but we are better off. And a deficit of 4 or 5% as verbatim given by the Met Department and of course the respective ministers and ministry is not going to create that much of scarcity in terms of output, agri-output productivity. The only issue remains, which has been a problematic one, is to improve the logistic and the supply chain from rural to semi-urban, urban, tier 1, tier 2 cities. That remains a challenge. And if you are going to see inflation being lower, and like we've been reading that the target is 5, 4.5 and closer to 4 over the next couple of years for the inflation, if we are able to achieve that, then I don't see any reason why there should not be an excess or an extra elbow room for rate cuts to come through. And we as a brokerage house at GH BNP Paribas, day before yesterday believed that from day before yesterday till December, we would get at least 25 bips rate cut. And from Jan, Feb, March 2017, we could expect another rate cut. So in total, from day before yesterday till March 2017, our view was that we'll get at least 50 basis rate cut. 25 bips is in the price. Await for next 25 bips in Jan, Feb, March, provided all the equations and the pieces of puzzle fall in place.
All right. Thank you so much, gentlemen, for taking our time. I have to go through the ritual of taking your disclosures. Let me start with Gaurang.
Well, thanks a lot. No personal holdings in the stocks and recommendations that are given out. But the advice that we give out to our clients would definitely have certain stocks that we have discussed.
Mr. Jaiswal?
See, we don't have any personal holding in these stocks, but we have recommended these stocks to our clients.
Jai Thakkar?
The stocks which I have recommended today, few of them we have already recommended to our clients, but I do not hold any of these stocks in my personal portfolio.
And finally, Mayuresh Joshi.
Do not have any personal holdings, but definitely recommended these stocks to our clients, and we may be holding these stocks on behalf of our clients.
All right, thank you so much, gentlemen, for joining us and giving your calls and your views this morning. All right, time for a quick break, and after that, George Joseph, fund manager